Welcome to Illuminati Silver. We tell you the truth about silver. If you are a regular subscriber, welcome back to the channel. If you are new, a big welcome and a request to like, subscribe and press the bell sign so you will be notified of future videos when they are published. Today's video is longer than our normal ones as we're going a little more in depth into the silver market. So please ensure you stay with us so as not to miss any important details out. Today we're diving into an exciting topic that could have a major impact on the silver market. You might remember the silver squeeze of 2021 when retail investors attempted to push the price of silver higher. Now, with the economy in a state of flux and silver demand on the rise, could we be on the verge of a silver squeeze 2.0? Stay tuned as we explore what could be the next big thing in the precious metals market. So what exactly was the first silver squeeze? Well, back in early 2021, retail investors banded together, primarily through platforms like Reddit's Wall Street Bets, with a goal of pushing silver prices higher. The idea was to apply pressure on large institutional players by buying up physical silver, causing supply shortages and driving up the price. While the attempt didn't quite reach the intended target, it did succeed in briefly raising prices and putting a spotlight on silver as an investment. But could something similar happen again? And more importantly, could retail investors have an even greater impact this time around? To understand whether we're on the verge of another squeeze, let's take a look at the current market conditions. First off, demand for silver is growing rapidly, particularly in industries like solar energy and electric vehicles. Silver is a crucial component in these technologies, and with the world increasingly moving towards green energy, demand is likely to rise. At the same time, supply chain disruptions are making it harder to mine and transport silver. This combination of increasing demand and limited supply creates the perfect conditions for a price surge. With silver currently at $34 an ounce, we've already seen a 47% rise in the last 12 months, and there is further to go. Another factor is the role of inflation and economic uncertainty. As central banks around the world keep interest rates low and print more money, many investors are turning to precious metals like silver as a hedge against inflation. Silver is often seen as a more affordable alternative to gold, making it attractive to smaller retail investors who might not be able to afford large quantities of gold. Additionally, geopolitical tensions, particularly in the Middle East and Russia-Ukraine war, are driving safe haven demand for silver. Historically, precious metals perform well during times of conflict and instability. Silver isn't just a safe haven investment or a store of value like gold. Its industrial uses are vast, and in recent years this demand has surged. Silver is essential in various high-tech applications, including electronics, medical devices, and water purification systems. But what's really driving silver demand today is its role in renewable energy, particularly solar panels. With the global push towards greener, cleaner energy, silver's role in the solar industry is crucial. Silver is a key material in photovoltaic cells, which convert sunlight into electricity. As more countries and companies commit to reducing their carbon footprints, demand for solar panels, and therefore silver, is only expected to grow. In addition, silver is also widely used in electric vehicles. As governments incentivize the production and adoption of EVs to combat climate change, demand for silver in this sector is projected to skyrocket. These industrial applications mean that even if silver's role as an investment fluctuates, its underlying demand remains solid, supporting higher prices over time. Now let's talk about what might happen if the global economy does not fall into a recession. as some fear. If the global economy remains strong or experiences moderate growth, demand for silver is likely to increase even further. A strong economy generally means higher industrial output, which in turn increases the demand for silver in manufacturing and technology. Countries like China and India, which are already some of the largest consumers of silver, are expected to drive much of this demand. Both of these nations are investing heavily in solar energy and electric vehicles, and as their middle classes grow, so will their demand for consumer electronics, another major use of silver. Additionally, the US and European nations are ramping up efforts to transition towards greener energy sources, all of which rely on silver. With a combination of industrial demand and investors looking to hedge against future economic uncertainty, silver is positioned for growth whether or not a recession hits. A stable or growing economy will fuel demand from both industries and investors, making silver an attractive investment opportunity in any scenario. Let's shift our focus to where silver actually comes from. The top silver producing countries are Mexico, Peru, China, Chile, Russia and Poland. Mexico is by far the largest producer, responsible for around 23% of the world's silver production. Peru and China follow closely behind, around 13% each. Each of these countries faces different challenges that could affect silver supply. For example, geopolitical risks in the Middle East and Eastern Europe could impact the global economy and, by extension, silver prices. While countries like Mexico and Peru are not directly involved in the Russia-Ukraine war or the Israel-Hamas conflict, the economic ripple effects of these geopolitical events cannot be ignored. Rising energy prices, supply chain disruptions, and heightened inflation caused by these conflicts could impact mining operations and the cost of silver production. Additionally, any conflict that affects global trade routes, particularly in Eastern Europe, could disrupt the flow of silver from Russia, which accounts for around 5% of global production. Though not a dominant player in silver, Russia's role as a key producer of other metals, like palladium and platinum, could cause supply bottlenecks that indirectly affect silver. On the other hand, countries like China, which consume large amounts of silver, could also drive demand. China's response to global tensions and its own internal economic policies could either stimulate or dampen silver demand, depending on how the country navigates its industrial output and consumption needs. Now let's address another important aspect of silver demand: silver jewelry. While silver is often viewed as a metal for investment or industrial use, it's also a popular choice in the global jewelry market. In fact, silver jewelry accounts for a significant portion of global silver demand, particularly in countries like India and China, where cultural practices and rising wealth contribute to high demand for silver jewelry. Over the last few years, silver jewelry demand has been on the rise, particularly as consumers in developing economies view it as a stylish but more affordable alternative to gold. Silver jewelry is also making a comeback in Western markets, where minimalist designs and sustainability are growing trends. This steady demand for silver in the jewelry sector provides a solid floor for silver prices, even when investment or industrial demand fluctuates. Now, while jewelry demand might not have as large an impact on prices as industrial demand, it still plays an important role in maintaining overall market stability. The cultural significance of silver in countries like India, where it is often used in religious ceremonies and weddings, ensure that there is always a baseline demand for silver jewelry. This adds another layer of security for silver investors. So why are personal investors, especially newer ones, increasingly drawn to silver? Well, first off, there's the accessibility factor. Silver is often viewed as the poor man's gold. It's much more affordable than gold, meaning new investors can start stacking silver without a massive financial commitment. This is especially appealing to younger retail investors who are just starting out in the world of precious metals. Another key factor is silver's potential for growth. Many personal investors see silver as being undervalued compared to gold, which is already at all-time highs. Silver, on the other hand, is still a fair distance from its all-time peak. This perceived upside makes silver an attractive speculative investment for those looking to profit from a potential price surge. Moreover, the influence of social media and online forums has been significant. Communities like Wall Street Bets, Twitter and YouTube have made it easier for individual investors to share information, insights and strategies. The first silver squeeze was a perfect example of how retail investors can come together to make an impact, and the buzz around a potential second squeeze is keeping interest high. For new investors, silver offers an entry point into the precious metal market that feels more attainable than gold, but with a potential for high rewards, especially if another silver squeeze does materialize. With all these factors in mind, what could actually trigger a silver squeeze 2.0? One key factor would be continued disruptions in silver supply. If supply remains tight due to mining difficulties or geopolitical tensions, retail investors could see this as an opportunity to band together and drive up the price by purchasing physical silver. Inflation fears could also play a role. If inflation ceases to fall and rises again, and erodes the value of traditional currencies, more and more investors might turn to silver as a hedge, leading to increased demand. And with more retail investors now aware of the power they collectively hold, thanks to the 2021 squeeze, coordinated buying campaigns could very well happen again. On top of that, if the price of gold continues to climb and becomes too expensive for the average investor, silver will look even more attractive as a cheaper alternative. This could lead to increased demand from those who want to hedge against inflation and currency devaluation but cannot afford gold. The more retail investors buy into silver, whether through physical bullion, coins or even exchange-traded funds, the higher the chances of triggering a price surge similar to what was seen in early 2021. One wildcard to watch for is the influence of online communities. Retail investors now know their collective buying power can impact the market. The rise of platforms like Twitter, YouTube, Reddit, and more recently TikTok has created a new dynamic in the silver market, with retail investors able to mobilize quickly and act on short-term opportunities. If enough buzz starts to build around the idea of a second silver squeeze, it could spark a wave of buying that might just push silver prices into new territory. Finally, the role of institutional investors cannot be ignored. Hedge funds, banks, and other large players are always keeping an eye on market trends, and if they see momentum building in silver, they could jump in to profit from the upward movement. This combination of retail and institutional interest is what really fuels large market moves, and it could be the key to the next big silver squeeze. In conclusion, while a silver squeeze 2.0 isn't guaranteed, the current market conditions certainly make it a possibility. The combination of growing industrial demand, inflation fears, potential supply shortages, and a strong retail investor presence creates a perfect storm for silver prices to surge. Whether or not a coordinated effort by retail investors will happen again remains to be seen, but the groundwork is definitely there. For personal investors, especially those new to the precious metals market, silver presents a unique opportunity. It's more affordable than gold, has significant growth potential, and is essential to the technologies of the future, from renewable energy to electric vehicles. Plus, silver's role in jewelry and as a hedge against inflation adds further support to its demand. If you've been considering silver as part of your investment portfolio, now might be the time to take a closer look. What do you think? Could we see another silver squeeze? Let us know in the comments below. And please don't forget to like this video, subscribe to the channel, and hit the notification bell so you don't miss any updates on silver, gold, and other investing strategies. We've recently produced a number of videos on gold and silver in the past few days and have listed the important ones in the description box below and added them to the comments section. Thank you for watching, and if you want further insights on other financial topics, then pop on over to our sister channel, Finances Do Matter, link below. Look forward to seeing you soon.